All right, here I am joined by Gali Russell from Hyperchange, and we just finished our part one of our video where we talked about the X holding company trying to put all of Elon's companies into one structure to free up Elon so he can do more. And if you haven't watched that video, go ahead. I'll link it in the video description below. Fantastic discussion that we had. And this episode, I want to focus specifically on Bitcoin and if Tesla should put a portion of their cash reserves into Bitcoin or not. So here, Gali and I, we are at polar opposites here. Gali put out a video. You had Michael Saylor on your show, and he is a big proponent of Bitcoin. He's put, I think, $800 million or something of his MicroStrategy company's cash into Bitcoin, and he's pumping it and wanting it to go higher, obviously. And Gali, you're a Bitcoin holder, I know that, and a Bitcoin, proponent. And you made a video, suggesting Tesla should, put a portion of their cash reserves into Bitcoin. So I feel like on the opposite side, I feel like all these red flags, I have concerns, but I want to give you kind of the floor, just share your, where you're coming from in terms of how you got the idea, how you think Tesla might benefit, and then maybe we could walk through some of the pros and cons together and, come up with something.
Yeah, love it. So, I've been a Bitcoin enthusiast since like 2013, 2014. Around that is when I bought my first. I was like blogging about it for the NYU newspaper. So I've just been fascinated with this idea of programmable internet money, software eating the world. Just been a nerd about Bitcoin, and to see it go from, tens of billion, 10 billion market cap to half a trillion, and to get all this mainstream adoption and to see how far it's come, like I've been like, wow, like I feel like a proud parent in some weird way of like, look at this little baby that grew up. Yeah, so I had Michael Saylor on, and I thought, and I saw Jack Dorsey and Square put like 1% of their treasury holdings into Bitcoin. They're more of a fintech company though, so that made more sense. But I was just fascinated by this idea, and I've always had the opinion of like, okay, I don't want to hold fiat currency. I want to hold high growing tech stock equity, Bitcoin, better stores of value. So I've been a huge believer of this Bitcoin store value digital gold thesis for a long time. Like it's better than gold, and maybe it won't replace all cash, but can it be in this, real estate, stocks, all this bucket of assets that we have, cash, is Bitcoin have a place as this programmable asset? And I like, yes. And so I own Bitcoin. So then when Michael Saylor came with this idea of like, dude, we're putting our treasury in Bitcoin, Square did it, everyone's going to do it. I love this idea. So obviously on my channel, I'm like a moonshot, kind of like that, like way too excited millennial shareholder guy. So I feel like that's the lens where I'm coming at this from. But like, I don't know. It's just, I think this is a fascinating idea. And when I looked more into his comments about how fast fiat's diluting, I was like, wait, this makes a lot of sense. And the Bitcoin bull in me does see an inevitable world where it is really thought of as a store value asset. And a lot of companies have either Bitcoin or an asset like it on their balance sheet instead of cash. Because right now what happens is Tesla, I don't think they should be buying Bitcoin if they can spend all their money and they want to buy engineers, factories, batteries, all this stuff. Like, screw Bitcoin. This is a distraction. We don't need it. It's going to be a total waste of time to push it through governance or whatever. But just the theory that Tesla in a month from now is going to have a board meeting and they're going to have 20 billion in cash they know they can't spend, and they're going to probably buy treasuries, or that's going to be on the table. And now I think there's a cyclical moment of where this no-brainer thing to just buy treasuries and keep your money in fiat is actually starting to be a really dumb idea. Or that's kind of like people are just rethinking of like, wait, this isn't a no-brainer. Let's explore to put some of our assets in different stores of value. And Tesla just sold stock at 650. They diluted us. And I don't want to watch them just keep fiat on the balance sheet for 2 years and have that dwindle because of inflation and the purchasing power that we just diluted our own equity for go down. So my whole take with this is like, I really love this concept of let's have Bitcoin on the table as part of the discussion of a treasury asset that we could hold on our balance sheet if we're going to need to store something. And so I thought it could be like, Square move 1%. Could Tesla just allow you to pay in Bitcoin on their website and then not convert all of that Bitcoin into cash? They could just really easily build up a super small Bitcoin position. So I'm personally not even like totally sold on this idea, but I just think I'm sold on the fact that when the next board meeting happens about what they should do with their money, this should be considered, or Bitcoin or another thing like Bitcoin should be considered, so to speak. Mm-hmm. So I guess that's kind of my angle, and just fascinated by the idea that companies will hold Bitcoin as a treasury asset on their balance sheet.
Sure. What percent do you think Tesla should consider holding Bitcoin? What percent of their cash reserves do you think?
I think 1% is a good start and just like a trial thing. And that's why I said if you just accept Bitcoin payments and we sell 500 to 1,000 cars a quarter of Bitcoin, we'll build up a $50 million position each quarter and we can get 200 million in a year and that'll be 1% of our cash. And yeah, I think logistically that's the best way to do it.
Do you think actually the board discusses this stuff? Like personally, I feel like the Tesla board, like they kind of leave almost everything to, Elon and Zach, where it's like, hey, like just you guys, like, I don't know if the board is really going this fine. I think I would imagine this would be more of a discussion between Elon and Zach Kirkhorn, right? The CFO.
Yeah.
Right?
And them telling the board what they
exactly. Yeah. Just reporting to the board saying this is what we're doing. If they even do that.
And the reason why now I think is so interesting is because now, and the reason why I kind of like banging my drum on it now is because now's the time when we don't just have 2 billion in the bank and like we have to spend it. Like Tesla's never even thought about what to do with their cash because they've only had such a tight buffer that they can't spend. But now we have more money than we can spend. And so that is the change of we actually have to think about how to store value most efficiently with that capital. And so I think that is the change that is going to spark some sort of new conversations at that level.
Yeah. So I watched your Michael Saylor interview, but I've also watched probably a good 4 or 5 of his other interviews over the past several months. And what I've noticed is a lot of his argument is built upon a thesis or a point of view, an assumption that cash is losing its purchasing power at a radical pace, right? Not just a few percent a year. And from that kind of foundational argument, then he argues, if cash is losing a huge amount of percent of purchasing power every year, then you need to do something about your cash to save the cash, right? That's the next point. And then how do you save cash? So then the next point after that is, well, you could put into, hard assets, but then it's not liquid, but then here's Bitcoin, right? As an option. So it's like, so you have these different levels of arguments he's making. When I look at that, I go to the first argument that everything is built upon. And I feel like in every interview I've heard, he keeps on repeating this statistic that cash is losing 15% of its purchasing power. And then he takes it further and he says, in 5 years, right, the purchasing power of cash will be half what it is today. Meaning if you take 15% per year over 5 years, that's basically a doubling, right? Or it'll be a halving. So he's projecting out that 15% for the next 5 years as well, making it a case, right, that you have to do something with your cash. But when I look at the numbers, like I looked at, the past 10 years, I took 2010 to 2020 real estate. It's like, goes up maybe 4% or something. Education costs was like between 4 to 5%. Like even healthcare costs, which is skyrocketing, it's still under 5% probably every year, annualized, right? And so even if, for example, housing goes up from $170,000 to $270,000 average national house price in 10 years, that sounds like a lot, but annualized, it's not that much. It's like, 4% or something. So this concept of cash is losing 15% of purchasing power, to me, that just is so far-fetched that I'm just like, if the whole argument is based upon 15%, losing purchasing power, I'm like, you lost me there at the first step one.
Yeah.
So help me explain kind of this step one.
Yeah. So that statistic is the M2 money supply, which is this money that households have, I guess, and you can Google it. So it's like 15.4 to 19.4 this year. So that's like the 20% rate that he's kind of quoting, and it's been accelerating. And so I'm kind of in the middle of your take and his take. And this is my first question when I interrupted him in my interview is like, bro, inflation's 1%. How are you going to tell me it's 15 or 20? Like, let's figure this out. And his thing is like, they're not counting it all. And just his first principles approach of the money supply is expanding, and that will eventually leach into inflation. And so I actually kind of really agree with that. And I've separately before Michael Saylor have just kind of had this theory of the awakening. Can I keep going?
Yeah, go ahead.
The awakening is what I call it, which is like people are just realizing like, wait, like I worked so hard for my money and now I'm putting it in this thing called cash that is backed by nothing that the government is just printing more of at an accelerating pace. How that dilution leaks and shows into the rest of the economy, who knows? But my theory is we've already seen a massive inflation of every single tech stock. That's, we've already see the supply of all this currency go around and the government's just printing another 600 or 2,000 or whatever. I think the crux of what the dilution has been in the past and it just all comes down to the fact that I think the fiat system is breaking and unraveling, or that's kind of my economist view. They're printing more and more at a faster pace, and that 15% money to supply expansion is kind of his barometer. I don't know if that's a good stat or not, to be fair. And so kind of throwing Michael Saylor's take and stat out the window, just my personal view is like, I do feel like the inflation that's reported by the Fed is super underreported. And I feel like there's this big awakening of like, wait, like let's not hold cash. And this hundreds of trillions of dollars that's held in fiat is actually going to slowly start cycling out to other assets, as it should. And then the pace of dilution of fiat will accelerate with UBI and all these new programs. So I see this kind of unraveling of the fiat system. And that's where I see, if you're holding cash, who knows how fast this M2 money supply expansion hits real estate prices, or hits this kind of prices, or hits Tesla's supplier prices, for instance, because that's what I really care about. But it's just this idea that the pendulum is right now all the way that cash and treasuries are a super stable asset. But when I see this data of expanding dilution inflation, I think slowly the pendulum will swing where we don't just have a no-brainer of storing value in cash. We start to think real estate, stocks, Bitcoin are better. And then as that pendulum of expectation swings, then that's when dilution starts accelerating and they have to print more and more. And so it's kind of this weird sort of apocalyptic bet that the fiat system's unraveling. And do I think there's a 1% chance that happens? Yes. So that's why I think we should put 1% of our money into Bitcoin. So I'm kind of in between you and Michael Saylor of like, I don't think it's this radical 15 to 20% dilution every year, but I think on a first principles of him watching the M2 money supply expand, accelerate, he's on point, and that will slowly leach into the economy. And then that is why I think, Square made the decision. And I think whether it's Tesla or not, I do kind of feel like a lot more entities will start moving in this direction.
Yeah, I mean, like when people look at the M2 money supply, like I get concerned because like there's a greater kind of economic system at hand where the M2 money supply is actually just a small portion of, let's say, the total value of assets, let's say, in an economy. And so let's say you increase, a small portion by 15%, it doesn't mean that the entire 95% or 99% or something is going to be decreased by that much. Meaning, it's more the M2 money supply affects in terms valuations of other assets, but it doesn't affect it as much as in its own bubble. Meaning it's a small part of a bigger economy of value of assets. Right, and that's why you can expand the M2 money supply by 15%, but you're not nearly going to make cash lose that much purchasing power. It's going to just be a couple percent at best.
Yeah. And so, and I think where I can add a little color here is I totally get what you're saying, like 15 to 19 billion, it's only a piece of the economy there. Yeah. But I think like the fact that, okay, we know fiat's diluting, whether it's 2% or 3% a year, whatever, we know fiat's diluting. And I also think not only is the supply of fiat increasing, but the demand for fiat is decreasing. So that's how I get in between the 2% dilution and Michael Saylor's 15%. I'm in between because I think this 100 trillion, 200 trillion demand for fiat is shrinking. So we have the supply increasing and the demand shrinking. And that's the compounding effect of where I do think you could lose, 8, 10, 12% of your purchasing power annually going forward. Like I think, and to me, it's kind of like I'm always ahead of the curve. I'm always way too excited about stuff. So me predicting this crazy hyperinflation accelerating tailwind, I'm probably too early on that. Yeah. But I just feel that it's the combination of accelerating dilution with people with the awakening of people saying we don't want to park our money in fiat. We want real estate. We want equity. We want Bitcoin, or we want whatever. We want crypto assets. And then the combination of dilution and shrinking demand is what has fiat's true purchasing power fall off a cliff.
So I get the whole thing of, let's say the M2 or let's say fiat money is increasing, but I think in a sense fiat or currency is instantly exchangeable for, let's say, stocks or real estate, whatever. So it's like, I don't know if it really matters the demand for the currency itself. Like there is some level of that, but I feel like, I agree in the sense that there's printing of money and there's growing anxiety over, the future value of fiat currency. I completely agree with that. But I think there's debate and argument of how much purchasing power is cash really losing. And I personally have, like, if you look at history, the past 10 years, I just don't see how you can make a case that cash is losing more than a few percent of its purchasing power per year. assets will naturally grow faster than cash. Like think about it, real estate, stocks, equity, right? These are companies building products. And so obviously they will have a higher appreciation than cash. And so, even, I mean, and then we've had a historic bull run since, the crash in 2009, and et cetera. It's been one of the best, decades for stocks as well. And so I don't know if we can count all of that and say, okay, cash is, the purchasing power of cash is decreasing because look at, stocks are increasing or real estate is increasing, but real estate didn't even double the national house price. So I'm just confused over 10 years. So I'm just confused in terms of, is it fear of cash losing power in the future and kind of like the government intervention of printing money that's causing maybe this forecast of, cash losing immense amounts of purchasing power, thus creating this urgency to do something about it. Like that's kind of what it feels like to me. I don't know. What's your take?
Yeah, for sure. And I think it's less about what has happened, more about me predicting that couple percent will accelerate and just preparing for it. And I think that's kind of the thing that I just see it kind of increasing dramatically. I had something to say about the oh yeah. So I think, going forward, I think it accelerates. So that's why I think we haven't seen it in the data. It's just that kind of FOMO. And I think the other thing that am really struggling with is like bonds. And it's like negative interest rates to me makes absolutely no sense. You have to pay someone to take your capital essentially. So it's like that to me is a huge signal that demand for fiat is like really, really weak. And like the US government, like we're not getting any returns on our bonds. Like you buy a bond with this return, it's like permanently diluting you. And the entire way we have to fund everything is by keep selling bonds to just pay off our debts. Like to me, that system is breaking. And the second it starts to break more, like this core inflation rate and the prices going up of everything is the last thing that drops. It's kind of the last catalyst after everything's broken. We start to see that happen. And so I think I haven't seen the runaway inflation ever until this year. Because I feel like it's not being counted well, but when I look at stock prices, when I look at like food prices, when I go to the grocery store, like I feel like there's a huge kind of quiet inflation occurring just from my anecdotal evidence. And to me, that is the start. So I've seen this quiet anecdotal inflation and I feel the fiat, I feel it's printing more. So I think that inflation kind of purchasing power erosion is going to accelerate. Mm-hmm. So that's the prop bet I'm making is, when I'm on Bitcoin and why I think Tesla should do it, it's like we want to get ahead of this fiat purchasing power, acceleration of erosion in value. But it's just a guess. I'm speculating.
Got it. Yeah. Okay. So here's another kind of angle of critique of it. So back in the day, let's say you look at past 10 or 20 years, there's always been a camp of, let's say, doomsayers where they're like everything's going to fall apart, et cetera. And you've had this camp in the financial circles of holding gold, right? They're like big gold fans, right? And kind of waiting for the pending doom of the economy, et cetera. And this is like every generation has, these circles. And it feels like in some ways, some of these doomsayers, like gold folks, have started to move into Bitcoin over the past 5 years, where I'm getting the same messaging that I've heard over 10 or 20 years, where it's like, this mistrust of the government, this crazy apocalyptic future of, everything raveling apart, this whole thing of needing insurance. I've heard this so many times over the years, like you need gold, that's your insurance because everything's going to fall apart, right? And this like fear of it and saying gold is the best investment because, cash is trash, et cetera. And I feel like all of this is moving over. When I look at it, I'm like, it feels like, in a sense, a lot of fear going on. And it feels like it's growing because the government is printing money. Like, where's all this stimulus money coming from, right? Our debt is growing, et cetera. And so I don't want to discount it completely. I don't want to say like, hey, this isn't important because it could be a real risk ahead. But I am concerned because I feel like just like the fear has driven some people to hold gold only over the years, they miss out on perhaps the bigger innovation at hand, the bigger trends at hand. I mean, we're talking about, we're in the middle of a huge, cycle of innovation, a huge era of massive transformation. And I feel like, that's a great investment there, And for people to be so scared that they feel like all their cash is going down the money or going down the drain, and they need to put a bunch of money into Bitcoin as like safety or insurance, it kind of feels like a little bit missing the point a bit. I don't know. What's your take?
I see the gold. I never bought into the gold bugs either, but I get why they're there. Like, I think it's really important to have an inflation hedge, and like all these buckets of assets are different theories of ideologies of how the future will unfold. So to me, there's always a percentage of the financial system that goes in this inflation hedge, like, and it's a really important thing. And I think governments would be way less. We were on the gold standard. I think we'd be printing way more if there wasn't G checks on the financial system like gold. And for as much as that we hate on the gold people, like gold has actually done pretty well. So I can't hate on them too much, but I see on one hand, like there is this kind of reason to have this inflation hedge. And I think Bitcoin is much better at it. So I think it's going to disrupt gold and kind of take that place of these apocalyptic naysayers who always do have a valid point. But then I look at that kind of apocalyptic store of value asset as being more important than ever because of the accelerating dilution of fiat. We can handle a certain amount of dilution, but to me, it feels like it's gotten out of hand. And that's when this G check of an inflation hedge asset becomes more and more relevant in terms of the financial system. So that's why my analysis is like gold sucks. You can't carry it yourself. You can't divide it. It's super expensive to ship, yet it still has 7 trillion because we are so desperate to financial productize ways to get into gold to make it that inflation hedge asset. So I think Bitcoin is going to fulfill that mark. And that's why I'm so bullish at 400, 500 billion, because I'm like, dude, I think this is, 8 to 10 trillion just replacing gold. We don't need to fix this whole fiat system. And that's still a huge upside. But I think the other thing is like, people like myself have owned like I haven't earned any cash, and I've been making, I funded my entire YouTube channel bootstrap with Bitcoin profits because I had the theory that this would be a better store of value than fiat. And so my question is, how many years is Bitcoin going to compound at 100% relative to fiat? And people like me are just going to be, our capital's compounding at like mind-boggling rates because we bet on this. So in some ways, like, I hear what you're saying about this kind of doomsday apocalypse thing always there, but I'm also like, those people, the Bitcoin people who've been saying that, have been right and have outperformed every single other asset on the planet thus far. And so I see Bitcoin as like, okay, I'm not going to judge whether it's dope or not. I just want to look at the data and see what's happening. And I'm seeing tens of millions of accounts. I'm seeing it moving trillions of dollars per year. It just grassroots, despite being decentralized, despite being this wild west thing, has accrued currency's value is its utility. To me, Bitcoin's utility is through the roof. I can move, it's cheaper, faster, easier to move it to more people than it ever has been before. Those are all just increasing and getting better. So I think you're right about the economy, innovation, the net present value priced in a true unit is increasing radically for humanity, and therefore the amount of value in the currency in theory should go up. And so I totally get where that's coming from, but I see Bitcoin as accruing a lot of the store of value of the economy of the simulation because people realize that even if we agree that fiat's getting diluted at 2%, Bitcoin's not, and that's already kind of structurally a better move. So I just think we're on this, and I don't know if it's Bitcoin, but the reason why I love it and I'm a fan is because we have the conversation now of like, it's not just everybody open a savings account and keep your fiat in it, which has been the status quo. And I think the fractional reserve system, I think, the way that we've just been kind of diluted and everyone's quietly getting diluted more and more every year, the US deficit goes up and up, we're printing more money, like it's reached a tipping point where the irresponsibility of governments, and you look at every third party government in the world that's not the US or Europe, their currency is totally unstable. It's a total joke compared to Bitcoin. So I see the technology of Bitcoin as just fundamentally as an innovator, software based, you can plug it in, it can't be diluted. This is just a better way to store value in the digital economy than holding it into fiat. And so that's what I call the awakening is that whole pie is increasing, but while that pie is increasing, we'll have it leaching from fiat to other assets that are better, and to me, I see Bitcoin as the leading cryptocurrency. And actually this is kind of a total tangent, but one of my friends, shout out to Alex, was talking to me about ETH versus ETH Classic. So he's a big believer in Ethereum Classic, but what happened is they kept getting 51% attacked. And why was that a problem? Because you're running on the ETH network. You have all these servers running a 10 times bigger network. Of course, you can 51% attack with basically the same algorithm, a way smaller network. So Bitcoin has the reverse property and why it made it so hard to hack, because you have to literally create a Bitcoin. Anyone that tries to create Bitcoin, all the miners can hack and kill instantly because their mining power is so much greater. And so to me, Bitcoin has had this runaway effect of being institutionalized, integrated with tech companies, kind of just being the first mover and getting swept up in this psychology of it being the new digital gold store value asset. And I love what Elon said. BTC sucks, but it sucks less than fiat. And that's kind of what I keep coming down to. And so I just think more people will have this ideology of like, I want to store my money in something that I really think through and kind of think will store my value better than fiat. And that's where this like millennial demand for Bitcoin kind of comes.
Personally, when I look at Bitcoin, I look at it, okay, what's the value that Bitcoin gives its users? Like, what is the valuation of Bitcoin kind of founded on? I think we have two things going on. One is you have this concept of a store of value that's kind of keeping certain assets safe, protected from inflation. And then you have this second value proposition of being able to transfer money or transfer value, right, from any 2 points of the world without the restriction of banks and governments, et cetera. And so when I look at these two things, what I look at is first on the store of value, I feel like it's very volatile in the sense that Bitcoin's valuations, a lot of it is determined on the future adoption or projected adoption of Bitcoin. Meaning, if everyone in the world 10 years down the road, people think are going to be using Bitcoin, then Bitcoin's going to the roof. But if right now people think 10 years down the road, no one's going to use Bitcoin, then it's going to sink to the ground. Meaning that a lot of the valuation is based on the projected usage, right, and adoption of Bitcoin. And that changes. And that's why Bitcoin has a volatility, is because people's projection of or view of future Bitcoin adoption changes over time, right? And so in that sense, I'm not necessarily saying the volatility is negative. I'm just saying it's a necessary part of an asset that's so, like, the future is so in flux. We don't know what Bitcoin is going to look like 10 years from now. Therefore, that is inherently part of its price fluctuation, right? And so, I mean, that's not necessarily a negative thing. All growth stocks will have that fluctuation and volatility too. But what is the risk is, what if the demand for the product, demand for Bitcoin somehow unexpectedly starts to go down over time? You could see a very fast and nasty spiral down. And like, personally, I think short-term wise, over the next, let's say, year or two, like, it looks pretty strong. You have institutions, you have companies, you have people jumping on the bandwagon. It looks like short-term price-wise, like next year or two, seems pretty strong. But do we really know the demand for Bitcoin in 2 years? Like it's all probabilities, right? You might think
Okay,
that,
yeah.
yeah, go ahead, go for
But
it.
do we know the demand for dollars? And my bet is the perception of demand for dollars goes down and perception of demand for Bitcoin goes up. So that's where my kind of crux of this lies, is people assume that, this currency is this no-brainer. To me, when you have the currency, you're speculating on a $300 trillion asset class for maintaining 300 trillion of value. Bitcoin, we're speculating on a $400 billion asset. It doesn't need that much adoption to go way, way up. So to me, fiat is priced to perfection. When I see at least a 1% chance that it's unraveling, actually like a 20 to 40 to 50% chance it's unraveling. So that's why and I think Michael Saylor makes such a poignant point of fiat. We are buying in at such a high valuation with so many expectations priced in about how relevant this will stay in the future, that is why I believe fiat is an equally as speculative choice as Bitcoin right now, just because of how much is priced into it.
Well,
Does that kind of make sense?
yeah, no, I totally get it. Like, in a sense of, especially people who have a view that, let's say, governments are incredibly, let's say, on rocky ground, or on a very unstable place, let's say, and they might be forced to print, trillions and trillions of more dollars, and the stability of, let's say, fiat is at risk, right? Like, I could see, if you take it from that angle and you are somewhat, let's say, go down that hole even more, then you could say, oh my gosh, like, we need some type of solution to, just holding something in cash, right? But my problem with that is, once you get into that hole, you just want, like, to me, it's more of a, like, why don't you just hold, like, a better store of value would be, for example, the S&P 500. If you're scared of inflation, just like S&P 500, like, that's inflation hedge, right? I mean, it's great. It's more stable. These are companies, the best companies in the world. You have a stability about it. Like, if you want insurance, just go with S&P 500, it feels like. Bitcoin, in a way, it feels like there is uncertainty. It's not foolproof, meaning, which, in terms of where Bitcoin is in 10 years versus S&P 500 in 10 years, there's a stability to the S&P 500, because it's based upon companies and products and services. Bitcoin, things have to go right, I think, for Bitcoin in 10 years to, for it to have, like, to me, to look at Bitcoin on the same level of stability and future, let's say, future proofness, to me, that's an illusion. Like, S&P 500 is far more, future proof. I mean, what are your thoughts with that?
past performance is not an indicator of future results is kind of like I feel like I'm taking the radical side and I'm probably too early, but I just deep down I'm like, yeah, like all the S&Ps priced in fiat, they're all making money in fiat, they're all not moving to Bitcoin fast enough. I think Bitcoin just accrues and has at a much higher compounded rate, and S&P priced in Bitcoin will decline dramatically. And I think the volatility of Bitcoin, to bring it back to that, is decreasing dramatically. So it's already more like less volatile. If you take out the upwards volatility too, like, to go from 0 to 10 trillion as an asset, we need a lot of upwards volatility. It's already more stable than third party countries or whatever currencies, I guess. And so I think that volatility will decrease over time. But yeah, and I think, that's kind of my thing is like, it's a little too early. Like, we don't have the history of Bitcoin. It's too risky. Hacks could still happen. You don't have 150 years of performance with the S&P. We don't have 400 years of history with the dollar. And so it's ideologically very hard to assume but to me, I just keep coming back down to the fact that priced in success. It's like why Exxon stock was way too high for too long, because all people like my grandma were counting on the dividend. Shout out to Grammy, she sold her Exxon stock. But like it just was inflated because of this dividend price, and it had been a dividend aristocrat. And so I'm really trying to not fall into just that thing of like, just because it has done well, it will. And even when I get down to that, it's like Bitcoin has actually crushed all of these strategies since it exists. Obviously, that's kind of a weird, I feel like cheating saying that argument sometimes, but like, I don't know. I just think, and that's kind of why I keep coming down to the 1% thing, because it's not like I'm saying put all our cash into it. It's like, let's just have a foot on our door in this future that to me, I think is a lot more than 1% likely. And like, probably deep down, I think it's too much of a pain in the ass for Elon and Tesla to actually do it unless they could just accept payment in Bitcoin and leave it. But deep down, I think this will become the norm, and I won't become radical, but there'll be, S&P, cash, Bitcoin. Bitcoin will really be a part of that conversation going forward. And that's why I was pounding the table of like, let's start thinking about this now, Tesla. We need to be ahead of the curve. Let's not be late to the Bitcoin treasury game. Let's be early if there is going to be a Bitcoin treasury game. So,
Yeah, I hear you. I mean, I have some other concerns with Tesla and Bitcoin. One is like energy usage. Like, you have Bitcoin network using probably like the latest estimates on the annual run rate is like 88 terawatt hours of energy. It's like insane, the amount of energy used to try to secure the Bitcoin network. And I feel like, sure, you can have these elaborate arguments of, oh, a lot of that power is excess power in China used from hydroelectric, et cetera. But if you look at the facts, that's not completely 100% true. I mean, this is power, it's energy. And if you believe in, let's say, for example, that network, and then you compare it to, let's say, Visa or MasterCard, there's all these arguments of, oh, maybe it's not that inefficient. But I think in a lot of ways, Bitcoin is not really used as like a medium of exchange. We're not talking about millions of billions of purchases of goods and services. A lot of it is, I think, trading. People just trading back and forth, and it's an immense amount of energy that's used. And then the second thing is, you have all these 50,000 plus employees of Tesla. Once Tesla takes on a position with Bitcoin, this is going to be the biggest thing in the Bitcoin world, where it's going to be everywhere, and everyone's going to be hounding every Tesla employee, their friends and family, saying, should I buy Bitcoin? Now, every employee of Tesla is forced to become like an advocate of Bitcoin, trying to explain, why Tesla has invested in Bitcoin, and they have to become like, and it's just a distraction. Like, it doesn't even match the ethos and the mission of Tesla. It's like, I don't know if it's worth it.
That's to me where I keep coming back. It's too much of a pain in the ass, exactly for reasons like that, for them to do it. But is it your fiduciary duty, if we have 20 billion on the balance sheet, to figure out our best store of value for those assets? Yes. And so that's where it kind of has to be a part of the conversation. But in terms of the energy usage thing, so dollar move per transaction on the Bitcoin network, like transactions on the network have been flat for 3 years because the average transaction volume is going up. So this is what I call the stagnation fallacy. The actual emissions per dollar moved on the network is dropping dramatically and will continue to do so. And yes, it uses a ton of energy, but it's also going to replace a financial system that uses a huge amount of energy as well. How many buildings are there on Wall Street? How many banks do we have in every neighborhood? How much energy they are using? How many receipts do we print? How much mail does my bank send me? Like, how many they're keeping the lights on every day. Like, I think there's a huge cost of energy that goes into the current financial system that Bitcoin is replacing. So I have not fully wrapped my head around this, because I think this is the biggest, like my biggest beef with Bitcoin is the energy consumption. But it's also the reason why it can't be hacked and why it's unstoppable, is because you would need so much energy to get enough hash power to overtake the network, that it also prices in this level of stability into the currency. And one of my friends was saying Bitcoin is like the global spot price on energy. So it's like this incredible way to think about it. So on one hand, I wish it consumed less. But it's also replacing a system that used a lot of fossil fuels. The amount of emissions per dollar moved is dropping incredibly quickly and will continue to do so. And just as humans, we need to dedicate a huge amount of resources to an efficient store of value technology. And that's why we have so many banks. That's why we have Manhattan built on Wall Street. That's why we have bank corners everywhere. Like, this is an important piece of the economy. So this is probably the biggest thing that I'm thinking about constantly, though, is how do I marry my world of the future needs to be sustainable, but also we need to have a product where everybody can have financial access. We're going to put Starlink. Everyone's going to have internet. All these people in third world countries can buy Bitcoin. It's a way better buy than their shitty third world currency. So to me, that's a really empowering thing for a lot of billions of people. It could do really good for the world in some ways. And so I'm kind of constantly torn between reducing our energy consumption, making us be sustainable, but also this vision of Bitcoin, which in some ways is a beautiful kind of technology utopia.
Mm-hmm. Yep. I get it. Like, I totally get the Bitcoin bull case. And it's fascinating to me. I love the implications and the significance of Bitcoin. I think it's still underrated in what it's trying to do. Amazing how far it's come. And yeah, definitely appreciate the conversation, Gali. Just want to thank you for joining me on this show, and wish you the best for the holidays and the next year.
Yeah, happy holidays. And I love going back and forth because we have different opinions. I think it's fascinating. So I love hearing your take on it. Thanks for having me on.
Awesome, man. Gali, take care. Talk to you later.
Happy holidays.
Okay.
Bye.
All right, bye.